If we leave tariffs to one side, is there a danger that actually we haven't really fought inflation hard enough? Again, there are a couple of Fed officials in saying a lot has been done, but we could see a resurgence quite quickly.
So first of all, I think what Powell was telling us last Thursday was certainly that they believe that inflation has been coming down on a path that they're very, very comfortable with. But when we start to think about what the election might mean for inflation, I think there are some worrisome signs. If we pick them sort of apart, you can say, first of all, the immigration is something which is going to be net negative in terms of wages, where you could say there's probably been one of the most positive drivers of U.S. economic growth and the labor market over the last years, been that sort of a higher supply of labor has both meant that the labor market could cool and growth could be relatively strong. So less immigration is likely to reverse some of that. Tariffs, all else equal, is obviously going to push prices higher. So I think inflation expectation is something that we need to worry about. And as an asset allocator, where high inflation is probably the biggest risk for multi-asset portfolios, it's something that we take deeply serious when we construct our portfolios.
So what does that mean in terms of where are you constructive? And is it, if this is a new concern, there's also a lot of concern about bond issuance and the fact that it's going up around the world, so that changes the premium.
So I think the way to construct a portfolio is obviously you have some longer-term inflation hedges, which could include equities, a degree of commodities. Oil prices we think are likely to move higher. We think it's underpricing geopolitical risk at the moment. Gold is something we have in our portfolio. It's been reacting a little bit negative after Trump got elected, but we've seen sort of a very strong rally in gold, both from central banks diversifying out of US dollar treasuries, exactly for reasons around debt concerns, inflation concerns, into alternative sort of areas of safe haven. So I think that's some of the things that we think about in our multi-asset portfolios.
How much more, Mark, do you think equities can rise from here?
We have 6,600 on the S&P for end of next year. So we think there's still a good upside. We have high single-digit earnings growth in the US. We think the tech sector can do well. Financials is a sector that looks particularly interesting these days, maybe a little bit shielded from some of these tariff wars, trading relatively cheap at a 12 times price to earnings on a global basis. And higher rates is something that helps on net interest margin. So financials is another sector, an example of something that could be doing well. Energy, yet another one.